Okay, well, we have our first guest and a big name at that. Jonathan Garner is Chief Asia and Emerging Market Equity Strategist at Morgan Stanley. Jonathan, great to have you with us here. Thank you very much for your time. You guys turned bullish on emerging markets late October 2022, and it's played out very well. I think the emerging market index is up some 25% since that point on. And now you are changing your assessment of EM markets and kind of rotating India right to the number one market for you. So I just want to start by asking you, what's leading you to do it? Is it, just India on its own, or is it a more relative kind of call with regards to what you're seeing or not seeing in other markets? Go on.
Well, typically when we get a bull market in Asia and emerging markets, it begins in North Asia, in Korea, Taiwan, and that's exactly what we saw this time in semiconductors and technology hardware. India's actually underperformed the rest of Asia and EM in aggregate over the last 9 months. It's been a volatile period of performance relative, but when we reran our process, it was strongly indicating taking profits, in particular on Taiwan, moving to the sidelines on China, going underweight Australia. Whereas for India, some of these secular drivers of the market are really falling into place. So it has moved up now, as you said, to number one in our ranking. And we think it's a time for foreign investors to re-engage with the market.
Oh, that's great to hear. India has moved up to number one in your ranking. Jonathan, good morning and thanks for being with us on the channel. In your report, you also speak about how India has a young demographic profile and that is what's supporting equity market inflows. Which are the sectors or spaces where you see disproportionate amount of flows come through in India because of this demographic?
Yes, I wouldn't want to do a sort of one-factor analysis and say it's only about demography. There are other very attractive features like inward foreign direct investment and private equity investment that funds CapEx is very strong as well. And India is very advantaged in this multipolar world framework that we use to think about the complex geopolitics that exists today. But on the demographic side, yes, if you look at GDP per capita of about $2,500, that compares to 13,000 in China. And you can certainly play that demographic theme through consumer and through financials in particular. And there are other sort of domestic demand plays, and that's where we're much more focused than on, say, the export plays. Another key feature of India that we have been talking about in this note is the tendency of the rupee to be far more stable than in the past and to actually appreciate in real effective exchange rate terms versus the currency basket, which is in sharp contrast to the Chinese renminbi that is now structurally starting to depreciate. And so for a global investor, you don't have to worry so much about the currency as in the past.
Hi, Jonathan. Good morning. Going through your note, and as you mentioned, from October onwards, actually, India has given just single-digit returns, while we have some of your peers say China, Taiwan, they're up more than 30%. But still, valuation-wise, well, we're trading at a sharp premium in comparison to the Chinese markets. Do you think this is justified? Do you think Indian markets can further re-rate from here on, going by the factors that you've mentioned in your report?
Yes, so obviously one's view on the forward PE depends on your earnings estimates, and our colleagues in India, led by Ridham Desai, are more bullish than consensus as we go out over the next couple of years. And India has this track record of compounding earnings now in dollars far faster than EM overall, and certainly than China. So the market is not as expensive, particularly on a relative basis, as it was last October, when relative to Taiwan and Korea, it's probably the most expensive we've ever seen. It's clearly not at any kind of low valuation, but there are so many positives in the market right now that we suspect investors will be happy with the multiple.
Jonathan, as you said, for long periods of time, India has done much better on a compounded basis. So it kind of looks through all the events, etc., and elections are one of them. So they come and go. But we've got one coming up, and I think, markets will pay attention to it. I mean, how are you thinking about it? You think that, going into it perhaps acts as a bit of a speed breaker or would not be an issue at all? What's the sense?
We don't have comments on political processes in any of the countries that we follow. We do observe, of course, is policy and the policy framework. And what matters in India's case for the call that we're making is things like the fiscal deficit, the way that interest rates are managed, whether or not foreign portfolio and FDI investment continues to be very strong. That's what we'll be monitoring. And at the moment, it's probably the best I've ever seen in over 2 decades covering India.
In your India report, you also speak about one of the big risks being a resurgence in commodity prices. And we're seeing that happen as we speak, right? I mean, crude oil prices have been rising for 6 straight weeks. Do you think that could be an impediment to the market up move?
Yeah, certainly that's been a traditional impediment for India. It's not unique in that regard. Most of Asia is oil importing. But our view is that actually end-use product demand in oil is not that strong right now. So we doubt that the recent strength is sustained. And given the external position that India finds itself in, much smaller current account deficit relative to GDP than in the past, and much more structural capital inflows from foreign direct investment and private equity, I think it's extremely unlikely that we get any significant volatility in the rupee arising from this.
All right, Jonathan, final question before we let you go. With regard to the India portfolio, how have you turned things around? I mean, any kind of stock-specific moves? I think Titan, there was Larsen & Toubro, I think there was a bit of a rejig out there. Could you run us through that?
Yes, we're not permission to talk about stocks on this interview, unfortunately, but broadly, yes, on the consumer side and on the industrials and financials, that's where we would concentrate the portfolio at the moment.
All right, Jonathan, we'll leave it at that. Thanks a lot for joining us. Appreciate your time here on CNBC-TV18. That's Morgan Stanley talking about why they upgraded India. And of course, compared to emerging markets, compared to markets like China, there are many things that are working in India's favor. One of them being the stability in the Indian rupee versus the Chinese renminbi depreciating quite a bit. So lots of interesting snippets over there in that conversation. You can hear it through the course of the day. Let's dip into a quick break. On the other side, our list of top 10 stocks coming up.